Charlie Pellet is with us at World Headquarters in New York, swimming in headlines today, beginning with this NASDAQ in correction territory. Charlie, what do you see on your end?
Indeed, the Dow, the S&P, NASDAQ, Joe Matthew, all very much in the red. We are getting a headline right now from Fed Chair Jay Powell. Says he expects the path to 2% inflation will continue to be bumpy. Powell also saying the Fed does not need to hurry, can wait for greater clarity. We will be having remarks from Jay Powell for you coming up in just a moment. Markets lower across the board. I want to really do big picture here because on the week, we are looking at a loss on the S&P 500 index of just about 4.5%. Today, moving lower by 0.9%. We've got the S&P down 50 right now at 56.87. Back now to Joe Matthew in Washington.
The value 56.87.
Perfect, Charlie. Let's bring you to Jay
56.85.
Chair speaking.
This is what you're talking about
on Bloomberg.
Speak to each other without violating the government.
Come on, say.
So I have some brief remarks about the economy and the path of policy, and then I look forward to our discussion. Despite elevated levels of uncertainty, the U.S. economy continues to be in a good place. The labor market is solid, and inflation has moved closer to our 2% longer run goal. At the Fed, we are intently focused on our dual mandate goals given to us by Congress: maximum employment and stable prices. Turning to the recent data, the economy has been growing at a solid pace. GDP expanded at a 2.3% annual rate in the fourth quarter of last year, extending a period of consistent growth that has been supported by resilient consumer spending. Recent indicators point to a possible moderation in consumer spending relative to the rapid growth over the second half of 2024. Further, recent surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. Sentiment readings have not been a good predictor of consumption growth in recent years. We continue to carefully monitor a variety of indicators of household and business spending. Turning to the labor market, many indicators show that the labor market is solid and broadly in balance. The jobs report released this morning showed employers added 151,000 jobs to payrolls in February, and the unemployment rate ticked up 0.1% to 4.1% last month.